Morning. Wanted to take a little second to share a little quick thought with you. So, reading a little financial journal, Crescat's macro model. And so, the graph that I want to share with you guys in reference to how they've categorized the current equities market and how they briefly here in this little summary give some information as to how in the past they've been fairly correct and accurate with being able to kind of time and to give a heads up as to when the markets might have a correction. So just to give you an idea, you can see what's going on here, but it just talks about at the very top, Crescat's macro model combines 16 factors across a key fundamental and economic technical indicators to time the U.S. stock market and business cycle. Then it goes on and gives just some little track record. But at the very bottom of this, the last paragraph, it says, we strongly believe U.S. stocks are overdue for a bear market and the time of reckoning is near. And then it talks about just, the rally or whatnot and what's to come. But here is the actual graph that I wanted to share, just because in looking at this graph, the first thought that came to my mind is, if you look at this, is it possible that people can see how something is labeled as overvalued and due for a correction, but still not look to take any immediate or have any plans to make any adjustments to what they're holding as far as their own portfolios when it comes to the retirement vehicles and just overall portfolios of investing in the equities markets. And so according to this little graph here, this is how they've been able to somewhat time and to predict that when something is due for a correction. So we got, of course, we all know what happened, .com, the real estate. So with this one here, we are at even greater highs in comparison to it being labeled as overvalued according to their model here. And so it's just one of the things that got me wondering. It's like, who can actually not think that this current market rally is long overdue for a real correction? And if that does, or not if, but when that happens, we can see how far it dropped on the last little correction or crash or whatever it's called, and not think that that same thing could happen again in the near future, if not sooner than we think, and it'd be a lot worse, or if we're at all-time highs relative, nominal numbers or whatever, imagine being at all-time lows to where there'll probably not be the typical recovery like there has been in the past. So just the fact that we have a financial institution, investing firm at that, telling that its time is overdue and it's bound for a correction, it's one of the things where it just catches my attention. And it makes me wonder how many people actually out there have made adjustments if their entire lives is based upon the equities markets and just following the conventional narrative of save, spend, invest in these type of markets where everything is overpriced, overflated, and bound for a real world correction. So just want to take a quick thought, share this graph here, get your thoughts on it, and then pose a question to you. Knowing where we're at, knowing what has happened, have you done anything different moving forward? And of course, the whole rethinking the dollar model is to get your weight up. So assuming that everyone has further positioned themselves in tangible assets, real estate, gold, silver, whatever it might be. But more importantly, don't forget about, the equities market and where you might be or where you have been. So once again, not financial advice, but to me, it's common sense that at these current valuations and artificial nature of an economy we're in, if this thing and when this thing corrects, I wouldn't be surprised personally. That's just me. But we'd love to hear your thoughts on how overvalued and late this cycle is, to where, according to a lot of people, this thing has to come down. And when it does, it will not be pretty. So just my little 2 cents this morning. Hope all is well. Leave a thought down below, comment. More importantly, if you find this informative, share this so that other people can see just what financial institutions are talking about. So enjoy your day.